Welcome to Classic Value Investors. My name is Mariusz Konieczny, and if you are a shareholder of Euronav, you probably had some questions and issues with the Belgium government withholding tax for dividends. So I thought I would bring on a tax expert, Paras Dagli, who's a fellow investor, but he's also um, a CPA that runs his own firm. Paris, thanks for joining me.
Thanks for having me on, Mario.
Yeah, so I reached out to you a few days ago, and you probably had a chance to look at Euronav. As you know, it's a Belgium company, so people are kind of confused as to um, you know what's going to happen. Is the government of Belgium going to take out 30%, 15%, or nothing? So what's your take on it?
Yeah, I mean, if you're a U.S. resident, the U.S. and Belgium have a treaty which basically will lower the tax that's withheld from 30% to 15%. Um, so the Belgian government will take away 15% of your dividends, um, and that is something that it should happen by default from the government. But if you really wanted to be cautious, you could talk to your broker and just make sure that if there's any settings or if you need to let them know that the broker is aware that they are correctly registering those shares under your name. Um, but for a majority of the people, it should automatically be done at a 15% rate.
Okay, now um, does this matter as to what kind of account you have, whether it's a taxable account or maybe non-taxable account like IRAs?
Uh, yeah, for the different accounts, it doesn't matter. The Belgian government will withhold the taxes on the dividends for the foreign residents, no matter what type of account it is. So, for someone that's investing in these companies through a retirement account, you kind of are at a loss in that there is tax that's withheld on those dividends, even though the account that's used to make those investments is a non-taxable account. Um, but the Belgian government is required uh, to withhold it, so they don't really care what type of account it is.
Okay, so they're going to withhold 15% no matter what.
That's correct. Yeah,
Okay, so let's say the total dividend amount uh, is $10,000 for the year, right? To make it simple. If if you were invested in a regular U.S. Company, that $10,000 you would receive in dividends, and then you would claim that amount, and then you would pay your dividends to the U.S. government, right?
that's correct. Yeah,
Okay, so with that regular way, you would receive a 1099 from your broker, and you would put that $10,000 on your 1040 as qualified dividends, and then as you go through the form, then you would you know calculate your tax at 15% of that amount. Is that right?
that's right. Yeah.
Okay, so how is this different now if the $10,000 dividend comes with Euronav? Do you when you get 1099, like do you report the 10,000 amount on the qualified dividends, or do you say 8,500? How does it work?
Yeah. So let's say you got your account and it's got 10,000 from Euronav, and let's say it's got another 5,000 from um, some U.S. companies that you invested in. So you got a total dividend for the year of 15,000. The 1099 will show the qualified dividends of 15,000, and then it will also show that there is out of that 15,000 there is a foreign dividend um, um, of $10,000. and it will also show that there is a foreign tax withheld of, if we're assuming 15% on the 10,000, so that's 1,500 is what has been paid as foreign taxes on the dividends. So you have three numbers from the 1099. You have 15,000, which is your total dividends from all over. You have 10,000, which is your dividend from, in this case, let's just say it's just Belgium. And then you have 1,500, which is the tax withheld on that $10,000. And then when you report the income on the 1040, you will show your qualified dividends at 15,000. And then you would have to report that out of that 15,000, you have 10,000 of foreign income, which is basically the foreign dividends. And the form that you fill out for those foreign income, there's also an area where you can say that you have already paid 1,500 in foreign taxes, so that when you do your 1040 and you do your total taxes, the U.S. government will calculate the taxes on the gross amounts on the 15,000. But then, since you've already paid 1,500 to a foreign country in taxes, the U.S. government will give you a credit for the taxes that you already paid to the Belgian government. So technically, the U.S. government will calculate the tax, assuming that you owe taxes on the 10,000 to the U.S. government, and then it will say that, oh, you already paid to the Belgian government. Let me give you credit against it, so it nets out to zero. So at the bottom, and the net line will be just the tax that you owe on the 5,000, which is the U.S. dividends that you have.
Okay, so what you're saying is as you're calculating it and reporting the income, it's like as if you were getting double taxed, but then you subtract the redundancy through a credit.
That's correct. Yeah, the U.S. government will calculate as if you owe taxes on everything, and then they'll give you a credit for what you have already paid to a foreign government. So then the net, so they kind of, yeah, you, it seems initially that you're double taxed, and they give you a credit for it. So the net impact is really just the amount that you owe on income that hasn't been taxed.
Okay, and which form is it that you account for that credit, foreign credit?
There was a form 1116. That's the one where you show the foreign income, or the foreign sourced income, and then you also show any foreign taxes that you have paid in there, and then it calculates your credit that flows back into your 1040.
Okay, and what happens if, let's say, your broker messes it up and doesn't withhold a proper amount, and instead 30% gets withheld instead of 15%? Can you somehow get that difference back?
Yeah, you can get the money back from the Belgian government. So the U.S. taxes, you just kind of do the taxes based on the numbers you get from the 1040, and then if they withheld way too much, so that they withheld on a 30% rate, you would have to go to the Belgian government and basically say, hey, based on the treaty, you're only supposed to do 15%. There was some misunderstanding, so then they will issue you a refund for the difference in the tax that was withheld. There's forms that are available that you can file with the government to get that refund.
Are these forms in English?
Yeah, they will be in English. They will be available. I think I looked at Euronav really quickly, and they had a document where they kind of explained this tax, the tax rates that the Belgian government is required to withhold, and then they also discuss if you need to file for a reimbursement, kind of what forms you fill out, and in order to get that reimbursement to you. So yeah, I mean, these are stuff that you could either download the forms and you can fill it out and kind of follow the instructions, or if you wanted to, you could find someone that does taxes in Belgium and have them kind of prepare those returns for you. It should be pretty straightforward because there's really only the dividends that you are showing as income on the Belgium taxes.
Okay. Uh, and you, you're located in the U.S., so you do the taxes for U.S. individuals and companies. Now, there were some people, and I don't know if you know the answer to that, wanted me to ask you if this process is any different for, let's say, uh, EU investors or Canadian investors.
Yeah, I mean, each country's got their different tax rules and different tax treaties. The Euronav document that I found in there that discussed about the treaty they have with EU. So they have a lower tax rate there. I think it's 10% is what they were showing, but it should be very similar in terms of high level concept of how it works. The Belgian government will withhold taxes in your local government, local country. You would file the taxes. Most countries require global income to be reported. So you would show all the income, including the dividend that you got in Belgium from Euronav, a Belgian company. And then most companies will give you a credit to kind of offset the taxes that's already been withheld. But the forms that you fill out, the way they calculate it, all that is different based on how the tax rules work in those different countries. But for the most part, most of these, Canada, UK, they would have treaties with the Belgian government to kind of have a lower tax rate for the withholdings.
Okay. Okay. Yeah. I don't have any more questions. I think this was pretty clear, so thanks for doing this. Um, I'm going to link to your investment website in the description below, just in case people want to reach out to you. Uh, but do you have any other ways that, if people want to reach out to you, how should they contact you or anything like that?
Yeah, I mean, yeah, you're gonna put the link out to my blog. I don't have a website for the tax practice that we do, but I can give out the email address. People can shoot me an email, and I can more than willing to kind of help them out with the questions or tax preparations. My email address is paras, Paras, at americantax.net. And that would be the best way to kind of reach out to me. Obviously, you can go to my website and you can kind of see my investments, and then there's some brief information about me, and it has my email address there as well. So if anybody wants to kind of reach out, they can get the email address from that link as well.
All right, perfect. Thanks a lot.
Okay, thanks, Mario.